The Federal Reserve has made the claim that they will taper their balance sheets and increase interest rates. They will do so methodically and ensure that the economy continues to expand. Of course, the entire reason the stock markets have risen is directly proportional to central bank asset purchases. There's no way to be able to reverse course. It's going to be fun watching the snake eating its own tail. You came here for the truth, so let me unveil that for you. Today we're going to look at the Federal Reserve and other central banks and their actions. Let's begin with this. The sequence. Fed decreases the balance sheet, stocks tank. Fed increases the balance sheet, stocks rise. Magic. Now you will see for yourself on this chart, looking at the Fed's assets compared with the S&P 500. The S&P 500 is the red line, and you will see exactly what happened. The asset purchases completely correlating with this on a short-term scale. This goes back basically a few weeks. Now we can move that scale, and it starts to paint an even better picture as far as I'm concerned. Take a look at this. Stocks bottomed the same day the dollar peaked last Friday. Since then, stocks up every day and the dollar is down every day. What does that tell us here? When you see these patterns forming, you need to pay attention. You need to pay attention. This is just a couple simple examples of how this system is manipulated. US stocks, G3 central bank balance sheet. Does that look a little familiar to you? Complete correlation. Now this is a little older statistics that I'm pulling up here, but you can see that over time, over these years, since the central bank interventionist policy at its maximum, beginning right after the financial crisis, and the entire central bank balance sheets, wherever you're looking, G3, G4, G5, doesn't matter. Okay, we are seeing them completely correlated to US stocks, to the FANG stocks. We see them correlated even when you go out wider in the world stocks. I mean, it doesn't matter. All I know is that as time goes on, the central banks are the ones that are pushing out their tactics, whether they're buying up toxic debt, whether they're buying the corporate debt, or maybe directly buying shares. It doesn't matter. They print money, they buy something, force it up. The institutional investors come in, they chase that, then the retail investors come in right behind. This is a scheme that has been going on since 2009. It's been working very, very well for those stocks, of course. Now, this is, as far as I'm concerned, a manipulation. They are, in fact, pushing stocks higher. So what do you think would happen should they reverse course? Look at all the central banks, all the major ones. Bank of Japan. Now look, just take it from where they begin to interject after the financial crisis. All of them acting the exact same. They are all doing it to different degrees, one or another. Doesn't really matter. All of them have been printing. What do you think would happen if the Federal Reserve start to reduce its balance sheet? The ECB start to reduce. BBOC, the BOE, the SNB. Think about that. And let's not even pretend that the Bank of Japan is going to decrease that balance sheet. It's just not going to happen. Of course, stocks would drop as well. There's no other way around that. Why do the people in the financial media pretend? I mean, you have to be out of your mind to think that the stock market can survive without central banks pumping it up. If that was the case, they would have done so already. Why are they holding on to all these toxic assets? Put them out into the market. At least a little bit every month. But they're not. And I'm talking about on a global scale. They're not. They have to keep buying. All the while, they're telling us everything's good. If everything's good, why are you holding $15+ trillion worth? Something's fishy. Right. All right. Now, you can see this for yourself. Their plan. The estimated balance sheet reduction plan. There's no way. First of all, this suggests that there's not going to be any turbulence throughout this entire period of time. If there is, surely they have to reverse course. At the same time, by the time they're getting down to, let's say, underneath that 1 trillion mark, I mean, if we take this out, maybe 2024. I mean, we're still talking so many years into the future, all the while not having any problems along the way. This is a joke. This is not true. Truly not. And the average person, the average investor, the people in the financial industry, if you talk to them, they do agree with this. They believe, they have amnesia, they believe that everything is going to be just fine. For the time being, as long as central banks are printing, everything will be fine. The only thing that they can destroy is the currency itself. And just like Venezuela, just like all others that engage in monetary stimulus, they will destroy their currencies. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, they have a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. The first book is about the 4 asset classes and how to profit from it. My newer book gets into familiar topics, but also into earning income, reducing your monthly expenses, tax incentives, and more. So you can check those out at Amazon. Links are in the description below. Take care.